Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, Wednesday, 29th of May. This is the last week of the month, and remember that at the end of the month, usually we see volume spike and big investors, big hedge funds, and investment banks are taking big positions at the end of the month. So pretty much you have to take care of your risk management and your discipline. And when we see some kind of moves, it's just big money inflows, outflows, and we have to really take that into account, not to overextend, not to over leverage, and really manage our risk to the extent in which we have to protect ourselves for tomorrow. I would say I would like to open this video with this because sometimes when no big news are happening, we see extreme moves like the one that we saw today, really selling off since the overnight. A lot of people short, almost 20,000 negative delta on the S&Ps on futures. I mean, today's move has been a lot of, I think, frustration and a lot of people not knowing what is happening. So I'm going to cover the economic data as we always do, and also technical analysis. But remember that sometimes big money is moving and we are just in the middle. We day traders, we retails are just trying to day trade, and we are in the middle of this big money moving in and out of the market. And we have to not forget that we have to understand how these markets are trading. And at the end of the month, it's pretty much a little bit of warning for you to really trade this market. So today, Wednesday, NBA 30 mortgage rates are still above 7%. Look at the applications, minus 5.7, taking a toll in households because at these high rates, no one is applying for mortgages. Apart from that, we got Richmond Fed manufacturing and services. Services still in the positive, manufacturing in the positive, coming from negative. So still, we are in a strong economy. But look at these actions. These actions are quite important because 7-year note action 4.6765 versus 4.7. This 7-year note action took a bit to cover of 2.43, less than expected, and basically the pre-sale was 4.63. The high yield was 4.65. So we are pushing yields higher compared with the pre-sale, and primary dealers only took 17%. So these auctions are obviously how the government is being funded. And if we take a look to yesterday's 5-year note and 2-year note, these two were also offering higher yields and bid to covers were lower than expected. So the government, it's basically not being sustainably funded on this debt because dealers are not taking these auctions. And yesterday, this was one of the reasons why we opened today as red as we did. This 7-year note, it's also following the same pattern. These auctions usually don't take too much of attention from investors, but after yesterday's and today's 7-year note, I mean, we are seeing things in the market that are screaming recession. So I would like to point that out because the market right now at 1 p.m., it just took a toll towards the end of the 30-minute candle, and we are now seeing a little bit of recover. But overall, we are pretty much red across the board. Nvidia was pretty much selling off. Now it's again up. It's pushing the market, it's dragging the market the same as Apple. But I would like you to really take the big picture. We are still below this inverse fair value gap on the 30-minute. Today, we just sold off all night until the open, in which I took this trade because basically the risk reward ratio was skewed to the upside. And I was trying to find the bottom, and I took a couple of losses down here. This was the first, I mean, we were like, let me just check real quick. It was like since settlement until here, we were 0.74. And again, push down after push down after push down after push down. I took this trade because basically we took liquidity, and I was taking this fair value gap and taking that, the low of this candle that was pretty bullish. I was just wanted to take some scalp to take a feel of the market down here, and we never went there, and I got stopped out for a 7-point loser. And then I saw this move and I say, oh boy, are you serious? But then at the basically here I took not another loss but almost, because again the same kind of setup, liquidity being taken, push, fair value gap, and I took the trade here with the stop at low. I was not waiting for the fair value gap to be tested, and as soon as I saw this, I put my stop at break even, because that was what I was expecting, exactly that. Second trade, it's not a loser, but the second time that I was trying to find the bottom, and towards the open we saw this kind of move, and I say, okay, let's try third time to just take this market structure change, and it was pretty beautiful. We pushed to the upside, we left a big fair value gap into the open, and my risk-reward ratio was basically the entry was this market structure change, this pivot, and the low was, the stop was the low of the day. That was a 17-point stop for a 3-2-32. I was targeting the same kind of liquidity here, and obviously at the open, I think a lot of shorts during the overnight were just feeling nervous and they just covered, and I took the 60-point, and after this 70-point, that was my last trade of the day right after the open. I don't want to take any more trades. I just want to see the market, how it behaves. And how are we behaving? Well, it's pretty much the same as yesterday. We are just chopping around. We are the most important thing that I would like to highlight is this excess to the downside. We failed action down here, and we are now living in the 1-hour chart some kind of weak. But don't get me wrong, this is a high, this is a lower high, and we might be seeing today an even lower high. But look at this demand. The market is trying to push due to other factors. Nvidia is still pushing strong. Amazon is pushing strong. Microsoft is now trying to push. Apple is almost 1%. And I mean, the Nasdaq is trying. But what is happening is that basically small caps are not following suit. IWM Russell 2000 is minus 1.24. All the banks are just being destroyed today. Look at this red across the board. And the breadth is not improving. Breadth is actually being annihilated. Do you remember that I told you in the weekly recap, this might be a lower high. We might be in this wedge, but the momentum is slowing down. Look at the percentage of stocks down here on the yellow about the 20 moving average. The momentum is clearly slowing down, 43% only. The momentum on the 50 moving average, the percentage of stocks also moving down. And the RSP is just showing weakness. We are just seeing weakness across the board. This is, unfortunately, due to Nvidia FOMO on AI. This Nvidia push Microsoft, Meta, Google, all these AI stocks are basically squeezing higher and higher and higher. Look at this Nvidia. This is just insane. And look at the volume. The volume is just down here. Since this gap at the end of last week, we are just screaming higher. Some people may call this a bubble. I might agree. But what is true is that I'm not trading Nvidia, I'm trading the Nasdaq. And the amount of instability that we are seeing, choppiness everywhere, we are not seeing clear price action because the markets, I feel they want to go down. But this AI FOMO is just pushing, pushing, and pushing. And in the 1 hour, we can see clearly that this huge sell-off, we are still in the middle with a lower high being met and still a lot of people trying to buy every dip every single day. But let me tell you, let's be honest and let's be technical. Dollar is pushing a lot. I mean, dollar is pushing today a lot. And this is a divergence against the equities. The 2-year yield is pushing a lot, 5% already. The 10-year it's screaming higher, 4.6. And all this is happening behind the curtains, and the inverted yield curve is just screaming. Do you remember that on the weekly chart, on the weekly recap, sorry, I told you, okay, we are moving lower on a weak 2-year yield, but look at this move. This move screams recession fears. Because as long as we continue moving higher towards the 0%, we are going to call recession. And more, I'm seeing equities and outflows happening in the overall market, but the same kind of stocks are kind of pushing. This AI is basically blindly making people buy and buy and buy, but behind the curtains, we are sneaky seeing dollar yields and the inverted yield curve turning really scary. Treasuries are in a really big trend to the downside. Banks are red, big red. So what is holding this market? It's just one stock. It's Nvidia. It's the AI FOMO. What is happening here? I'm saying all this because when I have to take losses, I have to take losses. Today was a good trade, but I'm seeing more and more choppiness. I'm seeing more and more really weakness overall, outflows, dollar, rotation into defensives. I'm seeing small caps, divergences. I mean, we all want the Nasdaq to go well, but right now I'm feeling that we are so stubborn trying to buy every single dip that we are just not squeezing, but we are just grinding until one day this is what gonna happen. Something big, some big news are going to destroy this market at some point because the AI FOMO is not stopping, but I'm seeing some kind of divergences on big recession technical data that I'm not confident on buying dips anymore. And this is a word of advice, a word of caution for you towards the end of the week, because towards the end of the week, we are going to see Thursday and Friday PCE. And there's a lot of positioning going on. And this week is the end of the month. Friday, it's actually the end of the month. So we are going to see on Thursday, let me just check this week. Tomorrow, we are going to see GDP growth, corporate profits, and price index, continuing jobless claims, consumer spending, A lot of data is coming out tomorrow. And on Friday, we have the big PCE and personal income. So Friday is the last day of the month, the last day of the week, and the last day of big data. So we are going to see huge volatility. We are going to see huge choppiness in the market. So be prepared, adjust your strategy, and manage your risk the best as you can. The best you can, you have to control and to be disciplined, because this market is really, really difficult to trade. And I'm seeing things in other markets that I don't like seeing when I'm just trying to just buy the Nasdaq towards higher pricing. I'm not seeing progress. I'm seeing the Nasdaq and the ES stuck at one range, holding some weakness because the AI is pushing. I think the underlying economy, the underlying market structure are diverging with equities. So be really careful, because I don't like seeing this. I'm not confident on the Nasdaq to really keep pushing, and we have to be really, really careful this week. That's all from my side. As always, thank you for your time. If you found this video useful, please give it a like, subscribe to the channel, because I upload videos like this one every single day for market forecasts, market updates, and market recap. I appreciate your time as always. Remember that the trading day is not over yet. We are stuck at this range, and this is just AI pushing, short sellers having the confidence of some kind of recession fears. So we are at this point in which anything can happen, and I don't want you to just hope for all-time highs then get destroyed on these big moves. Be really careful. Volatility is about to spike tomorrow and Friday, and I don't like what I'm seeing in other markets. Be really careful. Stay safe, and see you tomorrow.